Hello, and welcome to the How to Exit podcast, where we introduce you to a world of small to medium business acquisitions and mergers. We interview business owners, industry leaders, authors, mentors, and other influencers with the sole intent to share with you what it looks like to buy or sell a business. Let's get rolling. And now a moment for our sponsors. I want to highly recommend you get Acquisition Aficionado magazine. Every month, Acquisition Aficionado magazine brings you tactics for business buying and selling you won't find anywhere else. Learn firsthand from industry leaders who share their success stories, featuring in-depth interviews and stories from leading figures in the business acquisition industry. This multi-platform mobile magazine speaks to acquisition entrepreneurs wherever they are in the journey. And I want you to visit acquisitionaficionado.com today. Hello and welcome to the How to Exit podcast. Today I'm here with Brian Shields. He's a seasoned acquisition entrepreneur, and I'm here to learn from you today, man. So thank you for being here, and I'm really interested in learning more about you and your story.
Right on. I'm excited to be here. Thanks for having me on, Ronald.
Cool. Now, you've been doing this for a little while now, 15 plus years, it looked like, according to the notes you sent me. Could you give us a little of your origin? I'm going to give up my old standard joke. So there's been a joke for a long time, but we'll give up the standard joke and just say, can you fill us in on how you got here and what you've done to lead up to being on the show?
Sure. Yeah. So I'm originally from Houston, Texas. I went to college at Morehouse in Atlanta. And so for the first half of my life, I spent a lot of time drinking sweet tea and enjoying fried foods and peach cobbler and banana pudding. And when I got to college, I was introduced to this thing called investment banking. And when I was introduced to it, my reaction was like, well, why would I want to go be a teller at a bank? and and then I quickly learned that that was not what that was. And so I moved to New York after college and spent about 10 years in investment banking and then at a private equity firm buying and selling companies. And so that's like the foundation of my career. And it's also where I learned what EBITDA was, both from a value and analytics perspective and from a hands-on perspective. I worked within the portfolio after doing a bunch of deals on the deal side. I jumped in on the operating side and helped run different strategic projects in HR and sales and inventory, and then went to one of the portfolio companies to open a division with them. And that kind of really taught me what it means to make money, right? And make the EBITDA on the page. And that really showed me that the investors of the future, I thought, needed to be like good operators, like people who understand how to run businesses. So I moved to California. I ran growth at a few venture-backed companies, places that I could get a lot of autonomy and a lot of responsibility early in my career, and had some success there. One of which, part of our growth strategy that I was leading, was to acquire a bunch of companies. And so in that time period, I was there for about just under 3 years. We bought 12 companies, and that was really successful. But that showed me that there are a lot of small businesses out there that are ready to transition from their owners to the next generation. And so I threw my hat in the ring. I left the company. I bought an HOA management business. I bought another one, put them together. We completely renovated the business. Like I like to say, we ripped it down to the studs and rebuilt it. And what came out of it was a much better, much higher quality service business. And ultimately that got on the radar of some people who wanted to pay a premium for that and jump into the market with us. And so we had a successful exit with that. And my wife was very happy about that. And I was very happy about that. So I'm really excited to share from all of those lessons learned, man. I've tripped, I've stumbled. I by no means have a perfect path or story, but I have a lot of lessons learned that I'd love to share.
It's interesting. You said HOA management company. I don't know if you knew this. I didn't tell you this beforehand. I have a real estate background. So before mergers and acquisitions, I owned a real estate investment firm, and we specialized in doing short sales. And when we first started, it was all investor backed, and it was called an investor backed short sale. Towards the end, we almost couldn't do them because all the regulations changed. The banks just kept rejecting offers because they didn't want investors buying it. So we ended up buying other stuff and trying to find workarounds. And I eventually shut it down. Actually, I sold it to my business partner through like just an equity swap of, I kept more houses, gave him it. And because I didn't think it was going to survive. A year or so later, he had to shut it down because the market was too hot to buy foreclosures, which is where we were specialized in, and it was just too competitive. I have a love-hate relationship with HOAs, right? I went in houses in them as an investment because now I usually owner finance my houses. I know all my owner finance clients. I don't call them tenants because they're buying I'm the banker in that situation. Those clients have to adhere to certain rules. So my house is gonna get taken care of, right? So I don't mind that so much, but I have never and will never own a house with an HOA. I don't like being told what to do. I usually live in the woods. So I was telling you beforehand, we're mobile now. We live in the woods. Even before that, I had 5 acres out in the middle of, nowhere in a like unincorporated area. Usually I like even the town I was telling you about, Guerneville, where I live now. This is unincorporated, right? This is
Mhm.
an unincorporated. We don't have a mayor. We don't have city police. It's just an unincorporated town. On the homeowners associations, a lot of people don't understand how powerful they truly are, right? And so you created a business where you help manage it. So was it like a systems process, SaaS or software, type of tool, or what was the business around that?
Yeah, so it's a pretty simple business. So for context for everyone, HOAs, right, the homeowners associations, they're the entity that maintains all the shared spaces and shared amenities in communal living properties. That could be a high rise or mid rise, that could be a huge single family planned community, etc. And so the HOA is in charge of making sure the grass is cut or the boiler gets replaced or we plan to fix the roof in a year or two and things like that. So they have huge responsibilities to ensure both the financial resources are allocated correctly to these different projects and that the homeowners within are complying with the rules that, to your point, Ronald, protect the asset, right? So, hey, let's make sure that we're not painting things that make the property values go down, or let's make sure we're not like punching holes in walls that aren't load bearing and then end up damaging like your unit and the neighboring unit or something like that. And so, within the context of that, that you can understand that there is a lot of people dynamics. There's kind of conflicts between the board and the homeowners, between homeowners and everybody in between. So there's usually a lot of interest in getting a third party to mediate and play a role in taking the load off of the board, both operationally to make sure like money's collected and bills are paid, and social politically in being in between all of those little points of drama that happen with the people. So our company was a HOA management company. We would come in, serve the board, and provide full financial support, operational support, and compliance management with the given HOA. So that's primarily a people business. We had people show up to board meetings and take minutes and make sure that once they have the to-do list, make sure the to-do list gets done, follow up with people to make sure that they understand that they owe some money for dues or special assessments and then collect that money, etc. And when we took over, the business had been around for about 30 years and it was running fine, but it had a negative net promoter score of 50, like negative 50.
Wow.
That's not great. That's not great.
No.
And so, no. And so, one of the things that I went around to do, and actually, just to be clear to listeners, the part of the reason that's really important for this kind of business is these businesses primarily grow through word of mouth. If you have somebody who's on the board of one HOA, they likely have another property in another HOA, or they know somebody who's in another HOA. Like they all know each other. And so, if you are doing well, then board member A will recommend you to board member B. But if you have a negative net 50 net promoter score, then board member A is saying, do not work with that company to board member B. So it's really important we fix that. So then I did a listening tour, right? Which I think anybody should do. If you're buying a company, you should sit with your customers immediately because I'm a very customer first owner and operator. So I like to think about what does this person need or want? How are they getting the service? And then what is the most efficient way we can deliver it at the highest quality possible, right? And so I started having those conversations and I would hear all these things that were fairly simple things that we could be doing that we weren't, like following up or giving updates on projects or letting people know where things stand or just answering the phone or sending emails back and stuff like that. And so on our side, what I recognized was that it was primarily a capacity and process flow issue. So the company had been set up to do things in a very old school way. I mean, we're talking about like to get a check paid, an invoice had to be physically printed, dropped off to two different people for them to hand sign, return to somebody for them to print a physical check, fold everything, put it in an envelope, lick it, mail it. It was ridiculous. So there was all those little things all over the company, and so we ended up just like looking at ways to modernize the business, and reallocate those people to more important, more valuable things. So like we automated that invoice process and then allocated that person to the accounting team to do higher level accounting work. We had people who were project managing on like yellow legal notepads, and so we implemented a project management tool, use Asana, that then helped us stay on top of everything. It helped me see if person got assigned 10 requests from the clients, did they complete 10 requests? And we opened it up to the clients so the clients could see, oh, I asked for 10 things, 7 of them are done, here are the updates on the last 3. And so that reduced phone calls to us and improved their happiness because they knew what they were paying for. And so that was a long answer to your question, but that just paints the picture of like what a property manager in HOA does and like how we approach kind of thinking about improving that.
Well, I'm excited that I even asked the question because you had some real winners in there. That listening tour. I'm a big proponent in building rapport throughout the process, to the point where I'll teach people on our team what it means to be a great listener and how to actually actively listen to another human being. A lot of people aren't ever trained in what that means. So to go out and actively listen to where you're really trying to understand not only what's coming out of their mouth, but what is the underlying motive and meaning and emotion behind what they're talking about, to actually spend the time and energy to figure out where your customers stand is beautiful. I don't know another word to explain that because it's so valuable in moving forward. I think it was a brilliant thing for you to do and to bring up in this process. I think a lot of people miss out on that. A lot of people miss out on they'll go through the due diligence, they'll talk to the business owner, and a lot of times they can't talk to the customer right away because of privacy issues, concerns with the owners. But the second you get a chance, just to do what you did and go out and meet with all of them. And I think my management style, I always jokingly say I've oversimplified management. I manage by 4 questions. I only ask 3 of them on every meeting, and about once a quarter, we do a 4th one. And it's always pat ourselves on the back first. What are we doing really well? Where can we improve? What can we do better? That's our second question. And then what are we totally missing? So if just did that with every single customer, hey, what are we doing good? What do you like about us? And gets them on a positive note. Okay, what can we do better? Because a lot of people won't
Hmm.
start off if you ask what we could do better, they're a little hesitant. They don't want to offend you. But if they just blew you up like a balloon and told you everything they loved about you, they're going to feel a lot more comfortable going, yeah, and you could fix these things. So there's
Hmm.
motive and mental work I've done about the sequence in which I ask these questions. And then what are we totally missing is, man, we're doing X, Y, and Z, and we just wish somebody else would take that over too. And then
Mm.
once a quarter, I throw a 4th question in. I was like, "What are we doing that we should probably just quit? Something we're doing is a total
Mm.
waste of time, energy. It hasn't worked. We've been doing it for the last 3 months, and we're just doing it because that's the way we've always done it."
Yeah, and good on you, man, because a lot of people don't ask those questions because I find like other operators, particularly people who are like deal people,
Mhm.
they waffle between they don't care or they're scared to ask, right? Because it's like, oh, this is people stuff, and like I like the numbers, but like, and implicit within that, right? You kind of have to be willing to be vulnerable because that client could tell you you're doing nothing good, or here's like the list of 75 things that you're doing wrong, and then that as the operator and the owner, you're like, oh man, now I'm freaking out because did I buy a lemon, or like what's wrong, or can I fix this, do they think badly of me? You start having all these internal kind of like narrative conversations with yourself that aren't productive, but that's part of that's part of the responsibility of the owner, the person in charge, and you got to ask those things because then you don't get better. And then if you don't ask like what should we stop doing, then you end up in a place where you just have somebody folding invoices and checks, and they keep doing it because we've always done it, and like why should we change it because we've been doing it? Like you
Right.
just get stuck in those habits.
Yeah, and a lot of people don't understand that just because you don't ask a question about a problem doesn't mean the problem doesn't exist. It's the you don't know what you don't know, right? So, a lot of people are afraid to ask, what are we doing wrong? Because they're afraid of what's being told. But those problems exist whether you ask the question or not, right? So
Mhm.
I can't fix it if I don't know what I don't know. It can't be addressed. I might accidentally fix something because it's a quirk and I didn't like it, right? But to intentionally make a change, that's something that you have to be both intentional about seeking out what's going on and intention upon the action of what you're going to do to change it. So let's move forward in the game. So you bought this, you've made some changes, it's growing. What was the first indication that you might, you're from investment banking. Did you know from day one you're going to sell it at some point?
That's a great question. No. That was like very much a we ended up there situation. And so when we acquired the company, my partner and I bought this like completely out of pocket. So we were in the context of nomenclature, we were self-funded searchers,
Yeah.
basically. And happy to talk about the process and how we found the business. But we went into it with the intention of turning it into a cash machine, right? We just wanted to pick up checks and let it run and not mess it up, and then it would be great. And so a lot of the changes we also put in place were for us to be able to manage the business remotely. I had had a bunch of conversations before closing on this one with operators who had had their businesses for like 10, 15 years and had successfully removed themselves. They're just kind of like, I check the finances once or twice a month and make sure everything's cool, check in with the team, but I don't do everything. And I was like, that's what we're looking for. That takes work, but we were willing to do it. So we came into it with that intention. We bought the second company to help us get some scale to continue down that path. And actually, so I mentioned to you, I used to live in the Bay Area and now I live in LA. So my partner, same thing. So he was in the Bay Area. He moved to LA. And then my wife and I were like, well, maybe we should move. So we moved. And part of that was to stress test if we could remove ourselves from the day to day, which effectively we were able to. But because we were also running a really good business, we had turned that -50 net promoter score into a break even net promoter score in 6 months. And we had started to see things like people actually referring new clients to us, getting positive reviews on Yelp and Google and stuff like that. So we were like, okay, this is actually working. We then realized that we had a good business and it would run, and that got people's attention. So then we started getting calls from search funders, and then
Hmm.
we got calls from private equity firms, and we said no because, as I mentioned, our intention was to have this business forever. And then we eventually got on the radar of a couple of strategics in the Bay Area who were actively looking to get into the HOA market. And initially, the conversation was like, "No, thank you." And then their side of it, the offers got a little bit more intriguing, and so we then said, well, all right, maybe let's talk about it. And I make that point to say, like, at a foundation, if you just go into this thinking, look, let's make sure that we're running a good business, that it's doing the things it's supposed to, that it's serving the clients in the way it's supposed to, you end up having options, right? We could have just kept it and stayed down here in LA and added on to it. We chose to take an opportunity to be acquired, and my partner, this was his second major exit. For me, this is my first, and it was like great to have that because seeing the ball go through the hoop for all of you entrepreneurs out there, like, it's working, you're getting paid and stuff like that, but there's like this feeling of completion when you do get a liquidity event, because then you get validated intellectually, at least, for all the decisions you're making, all the risk you took. And it allowed me to then start thinking about more stuff. And I was like, oh man, I could do even more. I could do this and get creative and have confidence that whatever I set out to do next, like I have a higher likelihood of being successful because I at least know what it feels like to do something to a successful exit.
So you've at this point in the story, you've been through the investment banking, you worked for some other kind of investment banking PE type of stuff doing acquisitions. Now you've bought your own company, fixed it, and made it what you needed it to be. Very efficient, running well. You got your customer satisfaction up to at least you're starting to get referrals, and then you sell it. There's usually this thing of, did you have the seller's remorse afterwards? At some point, you hit yourself like, oh shit, what am I going to do now?
That's a great question. Nobody's ever asked me that. That's a really great question, Ronald. So, uh, yes, the answer is yes.
Well, you got money, so that's
It's
one thing, but there's still this thing that's mental, like, "I'm bored, it's not now," right? Like,
It's interesting. It's been less about the boredom and more about the should I just have kept that asset? And like I mentioned earlier, right? Like my like definition of freedom in a lot of cases is you have this thing and it's producing for you, but you're not like in the day to day all the time, right?
mhm.
And we were kind of pretty close to that with where we were with the last business. And so in my mind, sometimes I have the thought of like, oh, maybe I should have just held on to that and then figured out how to do this other thing. And hindsight's definitely 2020. But I think to your point, like I'll just speak this for all the people who are thinking about buying a business. There is a lot of value in seeing the ball go through the hoop all the way and actually getting the check. It's validating. it creates like a little bit of like space, right? Just I took a year sabbatical after we sold the company because I was super burned out, but just the ability to do that, right? Like would not have been possible if we hadn't had that exit. And then just like we have two kids, like just having things set up for them financially and just feeling like that's out of the way, like that stuff is really useful. But definitely the times when I think about, okay, what am I going to do next and things like that, I'm like, man, I should have kept that asset and kept picking up checks. But there's always opportunity to do it again, so I'm just focusing on that. But yeah, man, that's a really good question because nobody really talks about that.
And aren't there certain lessons you only learn by seeing the ball go through the hoop, as you say? For like the tax, like just let's do this one. You sell the thing, and all of a sudden now you got to do the taxes on it, right? I bet you didn't set that up as what they call a qualified. I'm gonna totally draw on a blank here. The qualified something. There's a way to sell it, and you get to keep the first 5 million without being a capital gains because you did this qualified purchase and you'd invested a certain way.
We did not do that. And the challenge and so part of the challenge too, man, is that a lot of these acquisitions, like a bunch of the ones I did when I was buying those 12 companies I mentioned earlier,
Mhm.
and the second acquisition we did with this property management business were asset sales, right? And so you can do I think it's a qualified small business purchase or something like that. Yeah, forgive me. I don't know enough about tax to be dangerous on that, but there's that. And like if you buy the equity, then you can qualify for that stuff and then figure out the cap gains and protection. But with the asset sale, you end up getting taxed at the corporate level. And that was the biggest pain in the butt. So to your point, like you said taxes, and like everybody feels some kind of way about taxes. But as in when you sell the business, you're like, all right, man, I made all this money, and then you're like, wait, how much did I keep? It's not great. It's not great. So that honestly taught me that you just got to add a zero to the target exit, and then shoot a little higher.
Now you go into this next phase of your life. You've come out of the burnout phase. At some point, you took a year off. At some point, your mind just starts working again. I only know because when I did my real estate investment firm, transferred assets, I'd already paid. We paid cash for our tiny. We did it the hard way. We lowered our needs way down. Paid cash for cars. Paid house for our house. Or even our farmhouse was paid in full, and
Mm,
we have minor debts and stuff, but we were pretty low. So, in my mind, I was going to work projects and just kind of semi-retire, both for burnout reasons and some medical reasons. I'd been in a really bad car wreck and was trying to recover, but I found out really quick that you can get bored really quick doing even things you love. Right? I don't care what you say, you're not gonna golf every day, you're not gonna fish every day. Even if you're catching them every day, you're eventually gonna just get really bored with it unless you're traveling and going to new places to do it. So, some point in that year, you must have had a thing like, "I've got to do something." I'm going. Mine was COVID hit, and my wife said, "If you don't get out of this house and do something, I'm gonna murder you. You're driving me nuts." 4 of us living in 380 square feet, right? 360, I don't even know what it is. But, she's like, "You gotta find something to keep you busy because I can see that you're not happy." At some point, what was the catalyst to come out of that year off?
mm. I took this year off. I basically started when my son was born,
Okay.
so kind of watched him grow up. That was
Yep.
great, and I was tinkering with stuff here and there. At some point, I was like, I'm going to be a coach. I'm going to coach business owners, like how to improve their business and these executives how not to burn out. And like I had some progress with that.
Mhm.
I still have some corporate clients with that, but that wasn't, to your point, it was like that was cool, but it felt more like a project than the thing that I wanted to build. And then I was tinkering with this. I had lost my father. That's part of why I burned out. Like I had drained myself so emotionally turning around that business that I didn't have solid feet to stand on when real life stuff came at me. So I lost my father and I was processing that. So I started a fatherhood podcast and had like a community of men who were getting together to just like improve and share tips about their fatherhood. And that was cool. Similarly, felt like a project. But what I didn't realize until later was that these projects were helping me build my conditioning and my capacity back up. So I was kind of like I would take time and do like little notes and doodles and write in my journal about like things that were interesting to me or how I would think about what I wanted my life to look like going forward. This one coach and friend of mine back in New York, he would have me do this exercise called the ideal day, and he'd suggest you write out your ideal day in as much detail as possible, like down to the minutia. Like, I'm going to put on these kind of clothes and I'm going to eat this for breakfast and blah 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 blah. And so I had like these things that I'd collected over the year where I just like written them in scattered points. And I started like recognizing that I was wanting to do more. I had felt a little more recovered and I was like, oh, I'm taking more business calls. I'm like entertaining these ideas. I'm trying like going to networking events and like I wanted to go. So something energetic in me shifted. And so I sat down and I would like reviewed all of the notes that I'd taken. And this is my son and my birthday are a few weeks apart. So I turned 40 pretty close to when he turned 1. And so I sat down and was like kind of reviewing my notes around that time. And I was like, man, I think that I think I should go buy some companies. Like I know I had said I'm not doing that anymore, but it's pretty clear that's all I'm thinking about. And I think I just want to have a fund to do this in that I can work with other entrepreneurs and like put them into roles kind of like me, where it's like my first swag, but it taught me a lot about making my own money, taking charge and ownership of the decisions I'm making, and what it takes to be successful in the partnership. So I was like, I want to do that. And so I was like, oh no, it kind of freaked me out, right? Because when I sold the business, I was so just tired and exhausted. I was like, I don't want to ever do that again. And to come back to realize that not only did I actually want to do that, but I wanted to go bigger was a huge shock to me. But it took like those activities, like you said, like the fishing, the doing the things, like my versions of those projects, to then accumulate all of this like self awareness to recognize, oh, this is I should just go do this thing again. Like clearly, that's what I want to do.
Awesome. So, yeah, I get that. I see that you took the time to do those things. I did that same little self-exploration, what is my perfect day? I think I picked it up from, I think Frank Kern or somebody weird had it on some episode where he was talking about somebody put him through it, and I was like, that's a and he had the question there, and, I did it because, and I know I've done a bunch of the, like, Tony Robbins things and other stuff too. So let's go back to you went through this cycle. And now you figured out you're gonna like, almost at one point you're like, why am I doing this again? You're just driven to do something because you know it's the right thing to do. You know you want to do it, but there's some logical side of yourself in your brain that says, am I just a glutton for punishment? Right. So, because I get the same feeling sometimes when somebody says, you're 53, you're living out in the country. Why are you looking to buy more businesses? Why don't you do something simpler? I was like, "'Cause this is just something I enjoy doing."
Yeah, yeah, I would agree with that. I mean, I've for me, it's about how do you create freedom,
Mhm,
right? And in the capitalist society, ownership creates freedom, just fundamentally.
mhm,
And so I've been thinking a lot about how to do that, how to create an institution that does that.
mhm.
And also, there are all these entrepreneurs out there, man, that have built something. And having now done that myself, I respect, I did it for like, I own the business for about 2.5 years. But if somebody comes to me and is like, hey, I've had this business for 20, it's like 10x what I had. And I'm like,
Yep,
hey, you earned this. Here's a check. And more importantly, like, how can we continue to utilize your knowledge and expertise and all those battle scars you have to help myself or other people go further? And so that kind of vision for an ecosystem that self reinforces and supports the next generation, like that gets me out of bed. And it's like the how we do it, I think, is how I allow myself to not get burned out again.
mhm.
Being really clear. I think you said this earlier, right? Like being clear about the things that I should stop doing, and what am I really good at, just like do that and then just cut everything off. But there's like, if I can do that and then progress with more opportunities and businesses and growth, then I feel like that could be really successful. So I'm on a mission, man. I'm on a mission right now.
What's funny is that once you decide what you're really good at, what you enjoy doing, it can be extremely powerful. There's a book out there by Dan Sullivan called Who Not How. It changed everything about me. And, what I've decided is I'm a visionary, and I won't usually in my businesses define myself with this, but I'm gonna say it here on the podcast. There you go. Great, great. That's a great follow-up to the who, not how. But so do you use impact filters? Does it talk about the impact filters inside of that? Because I use those to this day.
Oh yeah. So just for people who are listening and didn't watch, I held up the book 10x is easier than 2x, which also by Dan Sullivan.
Yeah.
That was like big game changer for me this year. That plus who not how. And yeah, they talk about impact filters. It's completely changed how I think about working with other people.
Mhm.
Because like I thought, like I think like intuitively, I'm pretty good at dictating and being clear, like, hey, I need you to do X or Y, and like putting people in positions of success.
Mhm.
But it was like somebody who's naturally good at basketball, and it's like, oh yeah, I have like a good feel for the shot, and like, I'm tall. And then that person getting with a professional trainer, like Michael Jordan's trainer, and then it's like, oh, now there's a new level that I can see, and I know what to do with my skills. That was what like a lot of that Dan Sullivan work kind of unlocked for me, where I was like, oh, I can see not only how I need to function and where like my 20% is versus everybody else's zone of genius, but also here are some tools, here are some processes, here are some specifics of how to enhance what I'm the team people person in partnerships often. So now I know how to use an impact filter and be very specific about like what I need you to do, what we're trying to accomplish, your role, success, what I need to not be doing and what I need to be doing. Like it is great. I love that thing.
So in all that exploration, I figured out I really love solving certain problems. I actually define myself as a solver. But no, I don't, and I hate doing the same thing over and over and over again. As far as this podcast goes, I'm at the point now where I get on the mic. Pretty much, unless we're having an issue, like I need more guests or something, I get on the mic. The team edits it, they schedule everything, they market it, and then I work with the team. But that book changed a lot of things because a lot of times you just do things on your own because you know you're good at it, or you want to delegate. Now I delegate pretty much everything that I don't enjoy. If I really
Mm.
enjoy doing it and I'm good at it, I'll do it, if it's high value, but if I have to do it more than 2 or 3 times, I even try to find a way to delegate some of that stuff. So, let's talk about your new fund and kinda before you bought the homeowner associations company, did you have did your search actually say, "We're gonna go out and find something in real estate that was recurring revenue?" Did you have a buyer's box that matched, or did you how did you stumble across that search that landed the homeowners association? And then we're gonna use that to build on what are you searching for now, and how's that definition of what you're looking for?
Totally. So that is not where I started my search. Where I started my search, like if you go out there and Google search funds, they'll tell you
Mm,
like, here, come up with a criteria list and blah 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 blah. Having been in private equity, I knew like what things tend to make more stable and higher value businesses. So you hit on them, right? Like recurring revenue, diverse customer base, ideally a fragmented industry, because then you have the opportunity to both have a smaller business, but also you can consolidate and grow up in that. Ideally a growing market, blah 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 blah. So those were kind of like the academic check boxes I started with,
mhm,
and then I said, okay, cool. What industries do I know? And because of the private equity firm experience, the firm I was at focused on healthcare and business technology and services. So I was like, cool, I'll look at that. Those are my spaces. I've bought companies through that firm in those spaces. Let me just look at this. And specifically, I was thinking if I needed to make a phone call to get perspective on something, I have this great resource at my disposal. I can call someone and just ask them, hey, what do you think about this versus that? So the first really serious business I came close to was a dental lab. And so the firm that I used to be at actually used to own the second largest dental lab in the country. People in California that I was still close with were on the board of that. I had a text relationship with them. I would just like check in with them and be like, "Hey, this is what I'm looking at. This is what I'm thinking. What do you think about it?" So that was super helpful. However, Ronald, what deterred me from that was this point, and this is the most important thing I always tell people who are searching. I realized that you can talk yourself into anything on paper, but you really have to focus on like if you are the right person for this, and do you have some kind of unfair advantage to take to use in this specific business. And that became clear to me because I was talking to the seller of this business, and I was asking him about where the techs came from, where do you get people to work on the teeth molds and stuff. And he was like, "Oh yeah, I have a relationship with the school in Korea where he's from, and they send me students like new grads. I sponsor their visas, and then effectively like I get under market cost of labor." And I was like, "Oh man, like if he leaves, am I going to be able to keep that?" And then if he leaves and I step in, which for those of you not watching, I'm certainly not Korean. My mother's Filipino, but I'm not Korean. And I was like, everybody might leave. And then what do I do? And so then that made the EBITDA go from like a really attractive level to nowhere near an attractive level very quickly. and I did not have anything in my toolkit or my back pocket to be able to replace that quickly. And so that taught me that lesson. And so, like, we negotiated to try to structure the price that made sense for that, and it just didn't really work out. But that pivoted my search beyond just the academic checkboxes, beyond the like, who can I call to kind of give me advice, into also focusing on me, on Brian. What can Brian do well that will help contribute to this business to have it an out to give it an outsized return potential? And so that's how I ended up with the property management business. The company that I was at, the startup that I was at, that we bought 12 companies at, was a property management business for rentals. So I had understood the motion to find these businesses. I understood the motion to own and operate these businesses. I was pretty heavy handed with the operations team there too. And I knew that if people left, I would at least have some pathway to call people to help support this. And given there's a lot of legal issues with HOA, I had a network of specific like property and HOA lawyers that I could call who were friends to help support me. So I was like, this could be a really interesting opportunity. So then I started searching for those businesses specifically, and through my network, I actually found one really, really quickly. I left my company to focus full time on search in August of 2019. I had planned for 2 years, like the normal, what everybody says, and then I ended up closing on this acquisition in December of 2019. And so really, really focusing on like what I could do well. Like I planted my foot squarely in something that I knew that I could have an unfair advantage in, that wouldn't take a lot of effort, relatively speaking, given my network and access, to find something in that could also check all those boxes. And so then I pivoted and then landed on something that worked. And then to answer your other question, so we're kind of expanding that box a little bit. So that business was a B2B business, and it was a services business. So we're primarily looking at businesses like that. My partner in the new fund that we're doing has a wealth management firm. And so some of the people who are clients of his are entrepreneurs in business services.
Mhm.
So we've been building an investor base who primarily represent a few different industries in services and in people services businesses, so that when we buy a company like a concrete pouring company or a bookkeeping company, or something in between that's like a B2B, also like people heavy business, we have people we can put on the boards and surround us with more of those unfair advantages. The additional component is like, look, I can't run all these businesses, right? So that's real. But we have a network of people who are experienced that we can then plug in to support the business with their relevant experience. So we're taking it on ourselves to filter and create the ecosystem around these companies that have people who have unfair advantages, both at a senior level and an operating level, and that can help us create a unique advantage so that the business A doesn't go away tomorrow, which is very important. Like nobody wants to lose money. And then B, that allows us to see what the market's going to do without having a bunch of data, which is ultimately what that like unfair advantage comes down to, is your intuition on a market. So yeah, it's been an interesting journey. And whenever I talk to people searching, I'm very, very like strict about and discerning about like the industries they're picking, and are they the right person for this industry? Because you can talk yourself into anything, and I've done it, so I'm guilty of it too. But I'm just here to help you not make the same mistake I did.
So, interestingly, when my background's really diverse. So, served in the military, did military intelligence, got out of the military, was a defense contractor, did the tech world, ended up raising or going kind of up in that tech world, becoming director of operations for some of the cool startups around tech, the tech startups around back when Excite.com was head to head with Yahoo. I ran the Excite data centers and stuff. That said, got burned out on that totally, got a master's degree in marketing, ended up, of all places, back in Oklahoma, away from the tech industry, no tech jobs around, and ended up through multiple steps, of course, ended up owning a real estate business. So when I decided to get into mergers and acquisitions, I was going to buy some property management companies. And in Oklahoma, you have to have a broker's license to be a property manager. So I found a broker I liked, and a friend of mine, she let me hang our business shingle on that. We had quite a few properties of our own. So we started with ours, started taking on some properties of our friends, and quickly learned that I am not the right guy to run a property management company. I detest being called, to schedule a maintenance call to send somebody over because a light fixture switch swears up and down it's not the light bulb, and my maintenance guy says I just twisted the light a little tighter and it came on, right?
Yeah.
And,
Yeah.
so what's different now that we're like, you're out of the you're looking for B2B, servicing type of, companies. Have you made any acquisitions in the fund, or are you still setting this up?
We're still setting it up. We're entering into kind of a couple of diligence phases with of 2 companies right now,
Mhm.
and this was a pretty recent decision. So, like, I kinda committed to this with my partner in January of this year. We're
Pretty
pretty
quick, yeah.
close to we should have all the fund stuff set up by the end of next month, paperwork-wise, and that's definitely a testament of, like, know what you're good at and then get out of the way of people who do know what they're doing. So, we brought on a really awesome lawyer to do that stuff. And so, yeah, so right now we're just primarily focusing on finding great businesses and having conversations with them to get to a place where we can have an LOI in place. We have a couple of bids out right now, and I will say that the market broadly is a little different. I saw something recently that was like largest number of search funds raised ever in 2023, and so we run into a little bit of that, and as a derivative of that, the valuations creep up a little bit. But I think you and I were talking about this before. Like there are companies that just shouldn't be. They're just not worth like 4 times or 5 times. Or the favorite phrase that people, especially some brokers, like to throw into their memorandums is like, "This is tech enabled." And it's like, no, it's not. It's a staffing business. Like, there's not a lot of tech involved in this. So but yeah, now it should be like worth more, and it's like, dude, no, it's not. So that part of the market has definitely shifted. Like, there's a lot more of a conversation around buying businesses. There's a lot more capital starting to think about how to attack acquiring these businesses at this level. We just think about ourselves as people who have actually operated and exited and like successfully transitioned these businesses from retiring entrepreneurs. Like, my partner, in addition to managing capital for a bunch of entrepreneurs, he owns a couple of small businesses that he's acquired himself. I've done this a few times now. So we know, like, when we're sitting across the table from a seller who's thinking
Mhm.
about retiring, and they're thinking about what's going to happen to my team. Are you guys serious, and are you actually going to close this deal? We can tell them stories and point to the things that we've done and say, hey, look, like, we're not going to get this perfect, but we'll be upfront with you, and this is what we've been able to do. And if we're going to ask for seller financing, but you can trust that we'll hold up our end of the bargain because here's our track record. And that's been really, really advantageous for us.
It's interesting. I know that really helps a lot. We have an international group where we're buying up cabinetry companies of all things, companies that make kitchen and bath cabinets and stuff. I'm just a
Mm,
shareholder and a partner in this, but the group started before me, before I got involved, and kind of they recruited me a long time ago, and they said, "Go buy something and show me you're going to get something done." Because I played this realm where, like, I was looking at those real estate related businesses and stuff like that to do some form of roll up, and got pulled into a roll up of buying marketing agencies. And through 2 years of work, we had 26 LOIs signed. We were in closing. We had lawyers going back and forth. We were really making headway, and some of the executives on the team seen the dollar signs and seen we had too big an executive team, and decided they were going to buy us out, and caused a big problem. So we got our money back. I learned a lot of lessons, but I also learned the lesson of don't get involved with something that's going to take 2 to 3 years to see money coming out of, unless you
yeah, I hear
really
that.
have 100% control of it. So you have that. Now you're going out and to talk to people, you have the story to tell, you have the credentials. It's not like, look, I've got the academics for it, right? I've got the industry experience for it. Now you're like, look, not only do I have the industry experience, the academics for it, and the job experience, we've actually physically done this. We've bought one, we've taken it through the process, we've improved it, and we sold it for more than we've bought it for. That's a safe pair of hands, and that's a critical thing a lot of these small to medium business owners are hunting for. They want to know that whatever they created, this 20, 30 years of their legacy, maybe even 2 or 3 generations, could be 30, 40, 50, 60 years of, mom built, or mom or dad built it, grandpa built it, great grandpa built it. They're not gonna hand that over to just anybody. And a lot of those guys won't touch a PE firm, right?
Yep.
They're scared of the
Yep.
PE firm's gonna run it into the ground or chop it up into pieces and sell it to the highest bidder. So you become a very really interesting safe pair of hands. You said a couple times you're finding qualified operators to run these companies you're looking to acquire. what is that process? How do you go about identifying somebody who's quote unquote a qualified operator?
Yeah, I mean, there are a bunch of like standard things that we look for, right? Like, have you run a P&L of a size at or greater than the business we're talking about? And like, have you hired people? But the kind of like key things that we like to talk about internally is, have you sold before? Have you served before? And do you care how the sausage gets made? Right. And watching people having to sell their ideas or sell for revenue, even if they have like a side business, like you can be a general manager in a company, but if you have like a little side business, it's helpful because you understand what it means to go out there and actually earn what you get, right? Like
Mhm.
provide something that's meaningful, tell people about it, help them understand that it's valuable to what they need, and then get the money. Like that's massive. Additionally, like being able to sell your ideas to the team is really critical. So we just look for that. Service is really important. Listening to you talk about that seller who's worried about who they're going to hand the keys over to, like that's really important to us. We use the phrase stewardship a lot in our firm, and we talk about like how can we be good stewards of this person's business, this capital, this person's time, etc. We talk about that a lot, and so seeing that people are about that service life, whether it's something they do through their church or in their community or just how they treat the people they work with, like that matters because we don't want like there's no assholes policy, but that the opposite of that is someone who really is about service and like can understand both the client's need for service but their team's need for service. And then the sausage point, I mentioned earlier, like we just want to see people who actually care about how the thing gets done, because if you understand that, then you can better understand and create policies that account for ultimately what's going on, right? Like if I'm going to run a burger joint, like if you just decide, hey, I'm going to get new meat from this new place, then but it might be lower quality, then you're impacting the burger. Or if it's like, hey, we're going to get this but it's cold instead of coming fresh, then that impacts your process time and your packing of the patties time and stuff like that. Like there are all these downstream things that some numbers on a page might tell you to make a decision towards, but then like the reality of how it actually happens dictates that you do something differently. So those are the three important things that we do. And we have seminars that we run periodically just to kind of like meet people. And I think like literally this how to exit is like a conversation we talk about where it's like you're a mid-career executive.
Mhm.
Maybe you don't have the risk profile of you and me or some of the searchers to go out and like take a year to hopefully find a business. But if you can be in our network, we'll take care of that part for you. And then we'll give you a soft landing. You can bring all of this great expertise and training here. And then you can just like have a playground to run in. And if you take good care of it and are a good steward of it, then it'll feed your family and more for the next generation.
One of the guru type of guys that I went through, they actually taught a process of where you can sell a piece of the company and buy the operators. For instance, we were looking at a concrete plant, and unfortunately, some tax issues and some other stuff stopped us during due diligence from purchasing it. They told us yes in the LOI, but they had some debts and stuff to the IRS and other people that kind of killed it off. That said, part of the process was we had actually taken on somebody who had great operational experience running manufacturing type of companies, similar industry, had taken a company from, I think, like, I want to say about almost 10 million in revenue, P&L requirements. He was their lead. If he started off as their general manager on the floor and ended up being their head of sales. So they went from 10 million to $100 million in like 8 years. So like this guy wanted to own his own business, but didn't know how to do the search. He
Mm,
was putting $300,000 on the table for part of this purchase, and we're going to give him equity. So he was buying a piece of the equity. We were negotiating the deal, and he was going to be the operator. And the way that we was working it out with him in the long term was over a few years, he would probably become, if he hit his goals, he would eventually become the majority shareholder of that. We'd still own a
mm.
piece. But how does the equity work, and how do you structure the like what's in it for the operator? Are they getting a piece of equity and a salary? Or are they gonna participate in like some planned exit you have? Kind of what's the game plan?
Yeah, so we're prioritizing cash flow. So and for the LPs, and so we look for people who can co-invest, and we're not
Mhm.
looking for everybody to come in with $1 million, but it's like
Right.
what's meaningful to you, please
Mhm.
co-invest that. Then there's a bonus structure that is part of equity. So you get a salary, you have your co-investment, and then ideally with that bonus structure as you perform, then your total cash take home will increase. But that's also because the total cash of the business is increasing, and that's kind of our priority, is making sure that these turn into high distribution vehicles.
And is it sell by opportunity, or is it engineered to sell from the start? Like, you're gonna sell some of them, of course, because people are gonna come across to you just like your HOA business. Somebody's gonna make you an offer you can't refuse, right? You're gonna be stupid not to sell. If you engineer it from day one to this is very sellable, then both you have a very, very well-managed company, maybe not the best tax strategy in the planet, but you have a well-managed company and a company positioned to maximize value when you sell. Is
Yeah,
it
we're really focused on long-term old ownership.
okay.
So the I will say that I personally believe that there's a high overlap in building a company that will last
Mhm,
and sellability, like getting that offer you can't refuse. But a lot of people, and this is a big difference between like what we're trying to do and like private equity, for example, and search funds, candidly, is we're not trying to aggressively grow out of the gate, right?
mhm.
When you do that, that obviously has a meaningful impact on the potential exit value, but that comes at sacrifice, right? Like there's infrastructure sacrifices that could be made, there's cash flow sacrifices that could be made, there's like unclear sustainability of growth curve sacrifices that could be made. And that's not what we're focused on. We're just like, look, we want these businesses to be around for 30 years. How can we improve the customer service or the service delivery so that we can continue to earn people's business for the foreseeable future? And let's grow it at a rate that if there is a downturn or some unpredictable unforeseen thing happens, we can weather that. So we buy these companies all equity. We don't put any we put only leverage we put on is a seller note, just to make sure that there's skin in the game.
Mhm.
But that allows us the flexibility to manage the business in a way where we can make some investments and take risk, but it won't necessarily impact like our ability to pay our debt, and then we end up losing the business for some nonsense.
So, hey, we're running out of time now. One of the things we ought to do is make sure that people know how to get a hold of you, right? So if somebody wants to work with you, they want to be one of your operators, they want to invest in your fund or anything like that, how do they get a hold of you? What's the best way for people to kind of to reach out to you and know what you're working on and be a role in it?
Yeah, so we're getting our website and stuff set up now.
Mm.
Securities law, so we're working through that. But it's easiest to find me on LinkedIn. I'm Brian Lee Shields, Brian with an I, Lee Shields on LinkedIn. Just find me there, and I am super responsive, and I post updates there pretty frequently. I will definitely share this show on there, and yeah, I'm always happy to chat with people who are interested in any aspect of the acquisition journey.
And I'd love to have you back on as maybe 6 months or a year from now as you're starting to acquire things, see how it's going and do updates 'cause, both you're extremely intelligent. I wanna thank you for being here and sharing the knowledge and experience you've had, and you're also very humble. So, thank you very much for being here, taking your time and your energy and sharing your knowledge and wisdom with us, and, I'd love to see where it goes. I'd love to see, how it succeeds and what's going on. So, let's plan for that.
I'm in.
That's cool. With that, thank you for being here. Let's call that a show. Don't jump off right away. We have to wait for the files. I want to announce our new channel partners, the ITX Marketplace. Since 1998, ITX has created $5 billion in value by selling more than 225 IT businesses in 20 countries. ITX works exclusively with IT-enabled businesses generating between 5 million and 30 million who are ready to be sold, and M&A decision makers who are ready to buy. For over 25 years, ITX has developed industry knowledge that helps determine whether a seller is a good fit for their buyers before making the match. ITX Mergers and Acquisition Marketplace we have partnered with has a proprietary database of 50,000 plus global buyers seeking IT service firms, managed service providers, Microsoft service providers, software as a service platforms, and channel partners with Microsoft, Oracle, ServiceNow, and the Salesforce space. If you have an IT enabled business you're ready to sell, I want you to visit the itexchangenet.com/marketplace. How to exit. That link will be in the show notes. Visit them now.